Hey, what's going on, everybody? Max here with Because Bitcoin, and today we are going to be giving a breakdown and update video to what's going on in the equity markets, how that pertains to the crypto markets, and also give some thoughts on the FOMC meeting coming up tomorrow on March 20th and why it matters for both stocks and crypto alike. So, guys, before we get into the charts, and I know this is a little bit of a different video, we normally just talk about crypto, but I promise it does matter, and I'm going to explain all of the details as to why. Please consider not only liking, but also subscribing to the channel if you are new here. We are growing so quickly, and it's thanks to all of your guys' consistent support of what we're building here because Bitcoin on a daily basis. So before we actually get into this chart, we are going to provide a quick little update as to basically the last time we talked about stocks, which we were right in here. Okay, we were right here. So we're going to run back the tape and explain exactly where we were last time and how things have shaped up. Let's take a look. And, they're probably going to pause for over a year. So, they'll call this next one a skip and then they'll pause. But what could this potentially mean? So I think it could potentially mean a new all-time high for the NASDAQ. If we want to be, if we want to be bullish on things, it would certainly make sense that in similar fashion, leading up to the pause, we would get a pretty significant drop down. We'll make this red, just like the previous ones. They're all red, and then we rally. So again, very similar. We're going to try to keep it consistent here. So potentially pretty nasty drop leading into the pause. And then if we're not expecting rate cuts until June-ish of next year, and I say ish because no one really knows for sure, could we potentially see another 30% rally, all the way through maybe June of next year? All right, now that we're back, now that you've seen how we were viewing things last time, okay, and it's been a while since we've made an equity markets video, we were actually aggressively trading this. Like, we caught the crap out of this long. We were playing a bunch of individual names. Obviously, it worked out almost perfectly. But really, what was the backbone of all of this, right? It was, why did we recognize that, this was going to, at the time, the chart was like this. How did we prospect out this far that we were going to fall into this time and then, potentially go to a new high? Well, I mean, like the other video shows, right? One, there was some technical confluence here. But two, it really had more so to do with the macro. And I know it's kind of like a meme now. But we're going to throw up the effective federal funds rate, okay, to provide some context. So we're going to go through just a couple examples here as a refresher. And then we're going to talk about where we're at right now and why. Okay. So let's go back here to 2007, right? So we had a Fed tightening cycle. Prices were moving up, basically during this time, right? So it wasn't anything crazy, but, nonetheless, like, prices were moving up. And then what happened? We got a Fed pause and things really started to heat up, right? So what happens in a Fed pause? Typically, you see markets sort of dip into the pause like this, and I'll make it red, and then spring very, very aggressively out because people go, "Oh no, we're pausing. Something is wrong. Why are they pausing?" And then ultimately they recognize that people still have jobs and things might be breaking in the near future because of all of these, because of all of these interest rate increases right here, which do take, 12 or 18 months to actually work their way through the plumbing of the economy. But we see a dip into a pause, then we get a pause, nothing breaks yet, Goldilocks period, things rally aggressively. And then ultimately, as they start cutting rates, we're usually not too far off from, some economic turmoil, because a lot of the interest rate hikes that happened, way back here, are now starting to be felt, years later, and people lose their jobs. Or in this event here, obviously, a lot of people were locked into variable rate mortgages, and then interest rate hikes were, then felt here. People couldn't make their payments, and we saw the housing market collapse. You guys know the story. You've seen The Big Short. But anyways, quick little update, right? So during a Fed pause, we rally aggressively until things break, and then we dip. And of course, we tend to dip into the pause. So let's go forward again. Quick little update here, and I promise it's going to come full circle to crypto. And it's actually very important to start monitoring macro again, which is kind of a bummer because it's super boring, right? And it's more fun to just mindlessly ape altcoins. But again, what did we see right here? Fed hiking interest rates. We don't need to make that so thick. Fed hiking interest rates. Markets are actually being walked up while they're hiking interest rates right here. And then what do we see? We dip aggressively into the Fed pause, which happened right here by this vertical line. You can see this is the effective federal funds rate increasing. We pause, we dip aggressively into it. And then what do? We rally aggressively through the pause, make this green, and actually we'll just make these like blue, right? Because I want to put the dip in red, right? So we walk up during interest rate hikes, we dip into the pause. Oh, wait, nothing's broken yet. Then we rally aggressively out because the Fed has paused and they're done hiking interest rates and nothing is broken yet. And then they start to cut interest rates. And then typically you get some economic event in the not too distant future, right? So now we're going to look, and we actually rallied aggressively off the back of the first cut, right? So if you had just shorted on the first cut, you would have gotten blown out because there was like a huge, huge climb right here. And we're going to talk about all that, right? So where are we at right now, guys? And by the way, that same thing kind of happened here where you don't short the very, very beginning of the pause, okay? You can see that we pause here and then we had, another big spike up. So typically the first bit of cuts are actually like you kind of knee jerk reaction down and then, move up again. And then shortly after something happens, we'll say. So where are we at right now? Right. We've been playing this to the long side, really, really well. Things have, been super, super bullish. But where are we at right now? All right. Well, we gave an update why we got long into this, this technical level right here, right? It was zero point 0.5 weekly FEG falling wedge, also, lined up perfectly with, this Fed pause, right? Which is why we were prospecting this long because we went back, we studied every previous example, and we were like, okay, this always happens. We always sell off aggressively into a high time frame level, into a Fed pause, and then we rally aggressively out of it. So where are we at right now, and why does this matter for crypto? Okay, I gotta set the stage and provide context. And I know talking macro is not super fun, but we got to do it sometimes because sometimes it does matter and it does affect crypto. So let's talk about it. All right, again, I got it. You just got to let me finish setting the stage here. All right, so again, where are we at right now? Fed hikes. And this is, we'll just kind of do this. Like markets kind of grind up into the hike and then they sell off into the Fed pause. We'll mark that by red, So again, same thing that happened over here. We sell off into the pause. And then what happens? We get a Fed pause and we rally aggressively out of the Fed pause, just like we have every other time. Again, it's never ever different. It's just, it's just the same thing. So again, and then, what are we expecting now, right? Well, here's the deal, guys. Here's our most recent probabilities histogram for interest rate decisions. All right. So we have a meeting tomorrow. Today is the 19th. All right. We played the long side perfectly. We're going to continue to play the long side. All right. I need to bring this forward. Visual order, bring to front. Okay. So there's a 99% chance that we're going to stay paused at the meeting tomorrow. Okay. And then even moving forward to the next meeting, not the one tomorrow, but the May 1st meeting, there's a 96% chance that we're going to remain paused. But there's moving forward into June, there's now a 60% chance or 61% chance closer that we're going to get our first 25 basis point rate cut. All right. And then moving past that, there's a 50% chance that first rate cut is in, basically end of July, or maybe even, this is a pause and then we just kind of stay paused after, or this is a cut in June and then we stay kind of paused with one cut into July. But point being is they're expecting the effective federal funds rate to kind of do something like this. So we're kind of out into here. Here's March, April, and then we're supposed to start trending down in June. Okay. And then, it probably looks something kind of like this, and again, it's going to be smoother, I would assume. But, we're going to start cutting, kind of getting into the end of the year. Um, So what would we expect, right? All right. Well, now that we know this, and the reason we're talking about this again is like crypto is still traded as risk, guys. Like it's still traded as risk. People still perceive it as risk. So where are we right now? Well, in similar fashion, I would say like move this up here, right? Like we are kind of in this walk up somewhere, okay? And going back even further, guys, like let's just do this here. And then I made this, what did I make this? I made that green, so I went blue, red, green. So we actually got to flip this. So blue, red, and then the Fed pause walk up is green. And then you get the sell off being obviously red. So where are we right now within all of this? Well, we're in the Fed pause window. We're somewhere contextually, like we're somewhere around here, or we're somewhere, kind of around here. And I guess, that's right here. So, people are going to be way too early to short this because they don't know how to apply contextually, like, all this information and actually place trades around it. Like, there's no reason to be like, super bearish right now. We're still in the Fed pause. And, what we know is that every time, there's been a cut so far, typically you have a little bit more time, right? Like this is a perfect example from, the first cut that we had in 2019. It took another 3/4 of a year almost before we really tanked, okay? And then going back one more here, and there's more examples than this. I'm just looking at, most recent here. What happened this time, right? So we got our pause, and then before things like got really nasty, we had, 3 months, give or take. And I guess you could even count like this complacency shoulder, maybe even close to 200 days. So, the cuts themselves are not the cuts are actually bullish, right? But the reason that they're bearish is because everything is lagging, right? Like the reason like these interest rate hikes from over here in blue and blue, they're being felt, they're being felt over here. These hikes are being felt over here. These hikes are going to be felt over here. So, while we're in this Fed pause, like just recognize you're in a walk up phase right now. Like you are in an absolute walk up phase. We're going to assume that the first cut is going to be, in June. So until this happens, like you should expect, maybe local pullbacks and stuff. That's fine. But you should expect up. And then even through June, July, we'll pull back up this, we will pull back up this image of right here. So again, like we may not even get our first cut until end of July. So just say August 1st. So today's March 19th. So March, April, May, June, July, we could have 4 months before our first cut. And then even past that, like if we know our first 25 basis point cut is not really that bearish, and actually we can move up aggressively still for 90 days even, we could have until the very end of 2024. And again, these probabilities change all the time. So I just wanted to provide some context to where we're potentially at here. We called this move perfectly. Again, this should give you even more confidence that this time is in fact really not different, right? Like everyone likes to just say like, oh, we're just going to keep melting up and ignore all this stuff. Like eventually there is like a day of reckoning coming. Like there's a bloodbath coming because we went through a very aggressive tightening cycle and it will be felt. And by the way, that might mean that we are like way up here. We could be like up here, and then we have like a nuke to like here, and that level could still be well above even where we're at right now. Like this is the previous all-time high, from 2021. We could do something like this and correct later on higher than we even are right now, just to be clear. So I'm not saying it's like we're going back to the lows or anything like that. I'm just saying like there's a pullback coming at some point, and it's going to be in the second half of this year, most likely. All right, most likely. So what does this mean for crypto? All right, let's pull up Bitcoin. All right. A lot of people like to say, well, Bitcoin hasn't even been through, a tightening cycle. And to them, I say, you are incorrect. The 2019 one was a little bit goofy. because it was COVID, but we very much so went through one. So let's talk about it right now. All right. So what happened here during the Fed tightening cycle through 2018, right? It's a little bit different, right? But the most important thing is I'd like to show what happened during the Fed pause. During the Fed pause, Bitcoin rallied aggressively. Okay. Maybe it was a technical level. There's always technical confluence to this fundamental stuff, which is why you have to look at all of it. But what are we doing right now? And I'm not saying we're here and we're about to have like, a COVID style nuke. I'm just saying that Bitcoin is, in a technical uptrend. Things look really good. And there's also the tailwind of a Fed pause. Okay. So it's coming at a perfect time where we're in the same pause window. Equities are rallying as they should. People still have jobs. And, the halving is in 5 weeks, and we're benefiting, handsomely from the Fed pause, as all risk does during this time. Okay, so it's not just coincidence; like this always happens. So, anyways, what would I expect? Well, again, if we can hold strong, we should continue to rally. Not only equities, but we should continue to rally here through at least through the summer, right? Through like June, and then we get our first rate cut in maybe June or July or August. Um, Bitcoin could be 5 times as high as it is right now. But then, you have to consider like when they start cutting aggressively sometime after the first cut, that maybe springs like a high time frame correction, and then, we can go back up. But I would very much so, and by the way, we had the same correction over here, right? So like into the Fed, let's even label this into the Fed. Oops. It's amazing how this stuff works. People just, they don't know how to apply it to the charts and trades. What did Bitcoin do right here? Leading into the Fed pause. We sold off aggressively, right? Is it a coincidence? What did Bitcoin do here leading into the Fed pause? It's small, it's hard to see, but we nuked here. We went from 30 to 25, as equities were doing it too. Like, is it a coincidence? I don't think so. Some people might say it doesn't matter. I think it matters a lot. Um, so anyways, what happens here? We could do something like this. Um, you know, and look, we have time, right? We have time is what I'm trying to say. Like, we should continue rallying at least through the pause, and then probably even after. So I would expect good through August or September, as long as things don't, really begin to deteriorate. Nasdaq could be much higher, Bitcoin could be much higher. Um, things look good, but then ultimately, you have to recognize that there is going to be something like this as we begin to cut, because these interest rates will begin to be felt. And what does that actually look like, right? So here's the Nasdaq, here's Bitcoin, here's the effective federal funds rate. What's the real like telltale sign, right? Um, it's jobless claims. So when people, start filing for unemployment, what happens? So here, we'll make this a different color, make this blue. And we had a huge, spike here in 2020 because of COVID, right? But let's go back and look at the chart. Bitcoin obviously didn't exist back then, so we'll hide it. But what happened here in 2008? Well, you can see that, markets remained really solid all through this region, and then once we started to get initial claims to, begin to climb up, and you can see right here, like, this was curling up. We got above these highs right here. So like this, when people start filing for, unemployment, the Fed knows it's coming, right? Like they watch this stuff very closely. Like they know exactly when the labor market's going to begin to deteriorate. So, they know, all right, when people begin to file for, unemployment, this is going to start to move up. Initial claims and, unemployment rate, this is going to move up. We're going to have to drop interest rates, and then they'll be felt in a year and things will recover. And then, in the meantime, what happens to risk markets, right? Well, effective federal funds rate down, jobs market weakens, people file for unemployment, and then we get this correction. So it's always why they're cutting rates. Why are they cutting rates? Well, they're cutting interest rates because they need to. Something is not correct. And by the way, that is coming again, just like it does every single time, and it's a healthy part of the economic cycle. So, again, we do have time, but just I wanted to update you guys because, last time I made a video, you know, we were you know, we weren't even into the Fed pause yet, technically. And now, as we're getting within 2 or 3 months, we have to start watching this again because it's going to ultimately dictate, the risk appetite of market participants. But I hope that you guys learned something from this. I hope that you guys understand. I tried to make this as clear as I can. I hope you guys understand, what we're looking for. But, right now, guys, initial claims is literally like it's right in here. It's the same as every time we're chopping. People have jobs, they're not filing for unemployment. We're in a Fed pause. We're not expected to get our first interest rate cut until June at the earliest. And it's potentially even going to be July or later. We'll see what they say tomorrow. But just recognize on the high time frame, like we should at least have 4 or 5 months before things start to maybe get a little bit questionable. And we'll keep an eye on this. But guys, this is the same. Crypto is, it's very correlated to equities, and it's more now than ever because of all the ETFs and the institutional interest. So just keep that in mind. There's other things that we watch, as well, that provide some confluence for risk off. But guys, thanks so much for tuning in. If you enjoyed the video and you learned something, please consider liking and also subscribing. We drop these videos every single day. Last but not least, check out the first link in the description below. If you want to see behind the curtain and trade with me and the rest of the Because Bitcoin team, you will not miss a single thing in any markets. We have a very, very big and deep team. We cover everything that you need to know. If you want to take your trading to the next level, check out the first link in the description below. You can sign up for our Discord right now, and in less than 60 days, you will get free access included in your membership to the Because Bitcoin terminal. This will absolutely take your trading to the next level, and we are going to be catering our services around it. Again, we've been working on it for months and months and months. And again, that will be included for no additional cost. So, guys, thanks so much for being here. Again, please like and subscribe, and we will see you next time. Take care.